Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're talking, of course, about the first quarter results of Prestige Holdings Limited as well as Angostura Holdings Limited. Now, both groups would have reported quite positive financial results. Let's take a look at what would have driven those performances and what investors might expect in the coming months ahead. Turning firstly to Prestige Holdings Limited. Well, for their first quarter ended February 2025, the group would have reported a diluted earnings per share figure of 25 cents per share, whopping 59% increase from the 16 cents per share earned in that prior comparable period of Q1 2024. Now, driving that performance was less of revenue, which was up just about 0.5% from 341 million to just about 343 million, but more a decrease of cost management initiatives, which would have led to operating profits improving 35.7% from 19.9 million to 27.1 million. Overall, profit attributable to owners after finance costs and taxes would have increased from 9.9 million to just about 15.6 million, a 58% increase. Now, when we take a look at that revenue trend, we can observe that there was that 0.5% increase over that first quarter of 2024 to 2025 compared to 25.6% in that first quarter of 2023 growth and 10.3% in that first quarter of 2024, suggesting that there has been somewhat of a slowdown in terms of revenue trends or revenue growth. However, that has not slowed down the profitability of PHL or Prestige Holdings, and that really has been driven by improvements in operating and PBT margins, with improvement in operating profit margin, for example, moving from 5.8% to 7.9%, almost a 2 percentage point increase, and similarly in PBT margins, 4.5%, 6.6% increase, almost again at more than a 2 percentage point increase in terms of their PBT margins. So at a price of $10.95, PHL is trading at a price earnings ratio of 9.5 times below rather the sector average of 14.5 times, and offers investors a trailing dividend yield of 4.8%, pretty much in line with the sector average of 5.8%. So with stable revenues in mind, higher margins, at a appealing dividend yield and relatively attractive valuations, Bourse is maintaining its overweight rating on PHL with a stable outlook for the time being. Now, turning quickly to AHL or Angostura Holdings Limited, well, the group would have recorded an earnings per share figure of 11 cents, which was a 10% increase from the 10 cents per share recorded in that prior comparable period of 2024. Now, unlike Prestige Holdings Limited, revenues would have improved quite substantively, 17.4% in fact, from 188 odd million to 220.6 million, with gross profits improving from 14.2% from 95.2 to 108 odd million. Overall profits for the period improving that 10.2% from 20.6 million to just about $22.7 million. Now, when we look at the revenue trends for Angostura Holdings Limited, well, it has turned quite positive in a very robust manner after 2 consecutive years of negative revenue growth. Again, that 17.4% increase from 188 to 221 odd million over those comparable first quarters, most recently concluded, of course, 2025. However, we can see some deterioration in overall profitability margins, with that operating profit margin falling from 13.6 to 13.4%, while profit after tax margins have also narrowed from 11% to just about 10.3%. And even at the gross profit margin figure in that orangish color, declining a bit from 50.7% to just about 49.3%. So revenue growth heading in the right direction. Of course, cost management and operating efficiency, as reflected by operating margins, continues to be something that Angostura could work on in subsequent periods. Now, on a trailing 12-month earnings per share basis, we can see that there has been a modest decline over the same time last year from 74 cents to 71 cents. However, that price to earnings ratio has come down, making Angostura relatively more attractive, at least compared to its own historical levels at 20.8 times versus 27 times. So at a price of $14.80, Angostura is trading at a price earnings ratio of 20.9 times, well above the sector average of 9.8 times, with a dividend yield of 2.6%, again below the sector average of 4.5%. But keeping higher revenues in mind, new store openings, lower margins, and of course, keeping an eye on those elevated valuations. Bourse is maintaining its market weight rating on AHL for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773. Email us at info@boursefinancial.com. And of course, you can check out our website where all of our research is absolutely free at bourseinvestment.com. And of course, you can catch this article in the Trinidad and Tobago Guardian newspaper at business section, of course. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.